And Stephanie, obviously, Google is the one we're watching so closely. You sold your shares in Alphabet recently. Are you regretting that now that we see the big pop?
Well, of course. Good morning, by the way. Of course, I regret it up 10%. Look, the quarter was really good. It was very strong. But what I did do, Becky, was I did sell Google, but I put it into Facebook. Okay. And because I do think that the risk reward at Facebook is much more attractive. At 20 times, you're going to grow about 20%. And I do think with Google's numbers, you can kind of think that hopefully that Facebook will have a good number tonight, especially looking at the ad numbers from Google. They beat expectations by about 1%. Search was also very good across the board. Cloud up 45% was in line. There's nothing really to poke holes with on Google. My only thought was it was up 65% last year, and I made good money. And you know what? My good friend Jim Cramer said, never apologize for taking a profit.
Yeah, don't get greedy with it. How much, I mean, obviously the numbers were really good with Alphabet, but how much of the pop today do you think is because of the quarter, and how much do you think because of the stock split and speculation that as a result it might wind up as a Dow component?
Well, I absolutely think a lot of it is, most of it is the split. Because as I mentioned, I mean, the Google ads were good, search was good, cloud was in line, YouTube actually missed. And free cash flow was also in line. So, you know, there's puts and takes to the quarter, but it was solid. I don't want to put that down in any way, but I do think the split is really what is leading to this big gain. So, and it is a positive. So, yeah, I'm kind of sorry today, but there's other ideas out there that hopefully I'll make some money in.
What is your favorite idea right now?
Well, I do like some of the technology stocks. As you know, we've talked about it. I'm underweight tech, and I have been for a while, just given the massive run, and that if you add tech and comm services together, it is about 38% of the S&P 500. So it's a big weighting in my benchmark. So I'm underweight tech, but what I have been doing is actually buying in the last month a lot of the technology stocks that have sold off. So, for example, NXPI is a great story. It has a lot of auto exposure. They had a great quarter. They increased their dividend. They had added another buyback. The stock is actually very attractive, I think, at about 19 times earnings. Broadcom, we know Apple had a good number. Broadcom is a supplier to Apple. And also they have exposure to cloud and AI and data center. And they increased their dividend and buyback as well. And it also trades at about 20 times and has a 3% yield. So semiconductors I like, especially because they've lagged year to date. So, you know, I don't own AMD. That one is going to be a nice one today as well. But I do have some of these other names as well.